Secretarial practiced most importance match the correct pairs. Question number 1. Role and function of financial management. Meaning of financial management. Financial management is a specialized function of general management. It refers to management of business fund. It is mainly concerned with raising of finance and its effective utilization for achievement of goals of the organization. Definition of financial management. Financial management is concerned effective use of an important economic resources naming capital fund. Functions of financial management. There are two functions of financial management, routine functions and executive function. Routine functions is like record keeping and reporting, preparation of various financial statements, cash planning, credit management. Then we have providing information to board of director on current financial position or for making decision or decision of purchases, marketing, pricing, etc. First, forecasting financial requirement. Financial needs have to be carefully estimated in business. Money may be required for a long-term purpose, that is fixed capital, and for short-term purpose, that is working capital. Forecasting is not only concerned with amount of money required for a program but also includes a. Duration of a fund, timing of a supply funds, kinds of fund. Second, deciding source of fund. Once the need of finance is revealed, various sources of fund must be considered. Different types of security like shares, debenture, etc. can be issued to raise funds. Funds may also be borrowed from financial institutions and lenders. There should be a proper balance between long-term fund and short-term fund. Third, investment decision. Investment decision refer to the decision regarding utilization of fund raised by the firm. It relates to the selection of asset in which funds are to be invested. The fund can be invested in two types of asset, naming long-term asset or fixed asset, short-term asset or current asset. Dividend policy. A business firm is basically a profit-earning organization. The earning of the firm depend upon efficient utilization of fund. Financial management is also considered with the decision to declare dividend. A finance manager has to decide what portion of profit is to be retained in the business and balance is to be distributed among shareholders. Checking and analysis of financial performance. The checking and analyzing financial performance is very essential to carry out financial functions smoothly. For this purpose, financial statements are prepared and analyzed. This is of great value in improving techniques of financial control. Sixth, advising board of director. A finance manager provides advice to board of director in respect of financial matter. He suggests various solutions for a financial difficulty. Normally, financial manager give advice on important matters such as pricing, expansion, acquisition, dividend policy, etc. Conclusion. In conclusion, it may be stated that all activity or function of a business are ultimately related to finance and finance manager should effectively do utilization of all the financial resources for achievement of goals of the organization. Question number 2. Objective of financial management. Meaning, financial management is a specialization function of general management. It refers to management of business fund. It is mainly concerned with raising of finance and its effective utilization for achievement of a goals to the organization. Definition. Financial management is concerned effective use of an important economic resources naming capital fund. Profit maximization. Profit maximization is a basic principle of any business activity. According to this principle, all function of business aim at profit. The principle of profit maximization is a traditional concept. It is based on assumption that profit is a tool of measuring the success of a business firm. In simple words, the business firm should undertake only such activities that increase profit. The business activity which decrease profit should be avoided. Profit maximization is considered to be the most important business objective because of the following reason. It is difficult for business to survive without profit. Second, profit is a tool of measuring the success of a business firm. Third, high-level profitability result in better return to the shareholder. High level of profitability can generate funds which can be used for future expansion of business firm. Profit maximization has to be achieved for social economic welfare. Wealth maximization. According to Professor Solomon Itzas, the ultimate goal of financial management should be the maximization of owner's wealth. According to him, maximization of profit is unreal and half motive. The proper aim of financial management is to wealth maximization of equity shareholder. Wealth maximization is also known as value maximization. It means maximizing net present value of a firm. The focus of financial management is on wealth maximization of its owner, that is, supplier of equity capital. The wealth of a shareholder is reflected in market value of the share. So, wealth maximization means the maximization of a market price of share. The wealth of equity shareholder is maximized only when market value of equity share is maximized. Equity shares are traded in share market. The share price of a company quoted in share market index is a reflection of its earning capacity, dividend and retention policy. Financial decision making should aim at maximizing market value of equity share of company. Conclusion. In conclusion, it may be stated that profit maximization is a basic principle of any business activity and the ultimate goal of financial management should be maximization of a owner's wealth. Question number 3. Importance or significance of financial planning. Financial planning is an important function of financial management. It is a continuous process in day-to-day administration of business. It is not possible for financial management to go ahead unless he prepare financial plan. Definition. The financial plan of the corporation has twofold aspect. It refers not only to capital structure of the corporation but also the financial policy which corporation has adopted or intend to adopt. Importance of financial planning. Ultimation of waste. Due to financial planning, it is possible to eliminate the wasteful expenditure. There are several factors such as change in government policy of taxes, fluctuating interest rate, etc., which can be anticipated and tackled with the help of financial planning. Coordination. Coordination is the most vital part of management. Finance holds the key to all activities of organizations such as production, distribution, marketing, and personnel. This activity hamper if not supported by proper financial planning. Dynamism. Financial planning is demanding exercise which require dynamism on the part of finance manager. It means finance manager must take initiative and faces various changing financial situations as and when they arise. Accurate forecasts of future trend are required for effective planning. Fourth, communication. Communication is an effective tool for management financial planning. Enables the financial manager to communicate various aspects of financial plan to the executives of other department. Effective financial planning helps to finance manager to communicate easily with others in the organization. Fifth, decision making. It is necessary for a firm to take appropriate and timely decision to achieve its objective. Financial planning prepare itself for the attainment of this objective. Any scheme, howsoever effective, cannot go through unless budgetary provision is made in the financial planning. Integration. Financial planning gives a fairly good idea to the firm about its available resource. Financial planning is to be completed in full consultation and coordination of other departments. This promotes team spirit among all executives. Futuristic. Financial planning is effective when it forces event. It must take into account not only the present but also future development. This futuristic element of financial plan helps for advanced programming. Conclusion. In conclusion, it may be stated that financial planning is not only required for profit making but even for survival of the firm. The term financial planning refers to assessment of financial requirement and arranging the source of capital. For more important questions in SP subject, please prefer subscribing and click on notification bell icon for the next part. Total 15 important questions will be shared in this series. So watch continuously the series of question and answer session. Thank you.